Well, another day of pretty mixed picture across the markets in West Africa. Let's run through them for you, starting with the BRVM. The BRVM 10 index closed trading yesterday at 235 points, up about 0.5%, while the all-share index, the BRVM composite, gained 0.4% to close at 210 points. Total value traded on the day was pretty low at 1.3 million CFA francs. The currency currently trading at 504 to the US dollar. Is down just under 1% for the year. I moved on to Ghana. The GSE composite index closed the trading day up about 0.4% to 1,891. Sorry, actually it was down 0.4% to 1,891 points. So its year-to-date change is now trimmed to 57.7%. And on the other hand, the GSE Financial Stock Index closed at 1,608 points. It was down about 0.8%. Year-to-date, that index is up 55%. And moving on to Nigeria, we're seeing the bears return to the market pretty aggressively after we saw the market kind of stabilize in early trade. The NSE All Share Index down almost 2% to 35,751 points. Year to date, the market is now down 27%. So it's really trimmed many of the big gains we saw earlier this year. We have in the studio Kayode Akindele, a partner at 46 Parallel, to talk us through his thoughts about the investment environment right now. Thank you very much, Kayode, for joining us. So it's pretty bullish trend, a bearish trend we're seeing on the NSE today. Your take on where we go from here?
I think it might continue in the medium term because you're having external pressure. The foreign portfolio investors are withdrawing from emerging markets and frontier markets based on what Bernanke has said about easing the QE. And also there's been pressure on the currency, and that's put pressure on the market, and that's going to continue. Right.
So concerns around the currency, you think it's a big issue for foreign investors these days. We've seen the central banks step up to the plate recently, sold about $500 million on Monday, and brought down that rate to just below 160. So your expectations going forward and about the drive of the central bank to keep this rate stable, and of course how you rate their ability to do that now?
I think the central bank at the moment has ability to try and strengthen the currency and stabilize it. The issue is, if you look in the next 6 to 9 months, the revenues coming in from oil have dropped. And so the accretion in the foreign reserves is slowing down. And so how long can the CBN, if it has to for a prolonged period of time, keep this up, is up in the air.
Right. You know, you talked about the oil sector, and of course oil theft is the big reason why we're seeing the drop in oil production. And I just want to talk about the Fitch's comment recently, more or less saying that the reason why they're not upgrading Nigeria is because of slow progress in reforms. Of course, one of them is the oil and gas reform. So talk us through your thoughts about reforms in Nigeria and what this could mean for the economy going forward.
Significant areas of the economy require reforms, and the government have put in various measures in place to try and push that through. The most successful so far in terms of keeping the timetable, although it's been a bit slow, is power. Now the issue is that in all reforms you have diverse interest groups, and the government has to be able to try and align with enough interest groups to push it through. And I think that's the process we're trying to go through. More successful in the power sector than in the petroleum sector.
Right, but if we stay with this, the oil and gas space, some people will say it's ridiculous. For 4 years, we're trying to pass a bill that's supposed to attract investments to Nigeria. Many people say we're not serious. To what extent do you think this is hurting the economy in terms of the investments going into the rest of Africa these days? I know Gabon, for instance, is a vibrant oil and gas space. You know, so Nigeria may be significantly hurt by this.
It is, because it hurts various ways. Number one, investors are not sure about the environment now, because you have this all-encompassing reform that you say is going to put in place, and it's not in place yet, and no one knows when it's going to be in place, so you slow things down. So people can't make investment decisions because they're not sure what the fiscal terms are going to be, for one. I think secondly is perception. You have a perception of, if it takes you 4 or 5 years to try and push through what is a flagship legislation, then there's a perception about the strength of your government and the strength of the people trying to push this through. Because from the start, you know that this kind of legislation, they're going to have various interest groups coming in. So you should, from the start, you should have been negotiating with various interest groups in the National Assembly, various sectors of the economy to try and get this thing through.
Of course, the IOCs themselves.
Yeah, the IOCs, they're part of it, but I think that they're a smaller part compared to the various regional interest groups we have, the interest groups, local interest groups in the oil industry, that you need to get on board to push these things through.
What about the move to diversify the economy? Of course, agric is a big part of that. I think a lot of people have commended the reforms we've seen in the agri space. But in terms of the impact it's going to have on government revenues, when do you think that is likely to ramp up?
I think the impact of agricultural reform will be more on employment numbers than government revenues. Agriculture employs more people in Nigeria than any other sector. And if you reform agriculture and improve it, you can start seeing a dent in those employment figures, especially in the rural areas. I think in terms of government revenue, that would be more of a slow burn in that place. But I think for the government, the process is try and get employment figures down, unemployment figures down, and also because agriculture, a lot of it is based in the north, especially in the northeast and northwest, which are the poorest areas of Nigeria, and where we have this Boko Haram insurgency. So if anything that can hit those areas in terms of improving employment is also a good thing for the government.
Right. Of course, the reason why I brought that up is because the government is rounding up its roadshow for a $1 billion Eurobond. It's coming at a time, I think, a very unfortunate time for the government, because if they had tried to do this 2 months ago, the yield environment was a lot better, but now it's probably going to be a lot more expensive to raise debt in the international market. So your thoughts about the likely success of this Eurobond issue?
I think the Eurobond is going to be successful. I think the main issue now is what yield is going to be. I think the yield is still going to be lower than the yield would have been expected 2 or 3 years ago. It's still a very good yield, especially compared to domestic borrowing rates. So it makes sense. I think the interest in Eurobonds from frontier markets like Nigeria, especially with the size of our economy, is very real. You see what happened in Zambia, Rwanda, you expect it's going to be oversubscribed. It's just really a question of yield at the moment.
Right. Well, you just talked about compared to the domestic market, and I think there's still some sort of divergent views on whether or not it's a good idea to borrow in dollars. Is that a commitment, if you like, from the government that the naira will be stable? Because clearly, if there's volatility in the currency, it becomes a lot more expensive.
I think if in terms of external borrowing, you have 500 million outstanding. You add this 1 billion, it's going to be 1.5 billion. Look at it in the sense of our overall foreign exchange reserves and our annual revenues, it's a small proportion, and it makes investors comfortable. I think when you start looking at maybe 6-7 billion outstanding, then people start getting a bit jittery. So I think from that angle, in terms of the domestic market, the rates are just too high in a sense. And even you've seen the last 2 weeks, the yields have gone up again, and DMO had to cut short taking less money than it wanted to because of yields. And that might also be part of the effect on the stock market, because now people are seeing, domestic investors are seeing yields and bonds picking up again to levels where they're now moving out of equity and back into bonds.
How do you suggest people invest in this environment? Clearly equities is where it should be for long term, but now the market is bearish. Many people say buy into the dip, others say invest into the high yields we're seeing in the fixed income market. How do you balance all of this?
It depends on your outlook. I mean, if you're still looking at medium to long term, it's still equity. Especially now with the bear market as it is, some of the stocks were overvalued. And because if you look at where the stock market, the increase this year is increased without any new IPOs. There have been rights issues, but there have been nothing new in the market. So it's just the existing stocks, some of them being overvalued. So it's a correction. And so it should come in, and especially when sovereign wealth fund comes in, and it should have an effect as well.
Right, let's move, I want to really stress Dangote Cement, because it's what is really moving the market. I think it's about 40% of market cap or thereabout. So whatever happens to that stock clearly impacts the NSE All Share Index. So where do you stand on Dangote Cement? Is this expensive? Is this something you just have to have in your portfolio? How do you play a Dangote Cement?
I think it's something you have to have in your portfolio because of the size in Nigerian, size compared to the Nigerian Stock Exchange. So it's something you just have to have in your portfolio. I think if you look at where Dangote Cement, when it merged with Benue Cement, and the projections it made for the last 5 years, it hasn't hit any of those projections. Now, those projections were obviously optimistic. But Dangote Cement is still improving in a significant way that makes sense from investors. And I think another key issue that we have to discuss on Dangote Cement is the float. When Dangote Cement listed, there was a special dispensation on the float because it's going to list and it's trying to list in a foreign institutional market. And this was 2 or 3 years ago. Now, we've had no public announcement about whether the float is going to be increased, whether the waiver has been extended. Those kind of issues affect the float in the market, and is a part of the market regulatory environment we need to get addressed.